Hello, everyone, and welcome back to the Financial Freedom Show. If you're new here, I like to talk about personal finance, investing, and how to make your money work for you. In today's video, we're going to dive into the Vanguard Information Technology ETF, also known as VGT. We'll cover what VGT is, how it works, its performance, and whether it might be a good addition to your investment portfolio. Without further ado, let's get started. So first things first, what exactly is VGT? VGT stands for the Vanguard Information Technology ETF. It's an exchange-traded fund managed by Vanguard, which is one of the largest and most reputable investment management companies in the world. VGT aims to track the performance of the MSCI US Investable Market Information Technology 2550 Index, which includes companies from the information technology sector of the U.S. market. The primary goal of VGT is to provide investors with a broad exposure to the technology sector. This includes well-known companies like Apple, Microsoft, and NVIDIA, among others. By investing in VGT, you get a piece of the action in the tech industry's growth story. Now let's talk about how VGT works. When you invest in VGT, you're buying shares of an ETF that holds a diversified portfolio of technology stocks. The fund's holdings are weighted based on market capitalization, meaning that larger companies like Apple and Microsoft have a bigger impact on the fund's performance. Sectors represented in VGT include software, hardware, semiconductors, IT services, and much more. This diversification within the tech sector helps spread risk, as you're not reliant on the performance of a single company or subsector. VGT is passively managed, which means it aims to replicate the performance of the underlying index rather than trying to outperform it. This passive management strategy often results in lower fees when compared to actively managed funds. Now let's take a look at VGT's performance. Historically, this technology sector has been one of the best performing sectors in the entire stock market. VGT has definitely benefited from this trend, delivering strong returns to its investors. However, it's important to remember that past performance is not always indicative of future results. One of the advantages of investing in VGT is its low expense ratio. The expense ratio for VGT is currently around 0.1%, which is quite low compared to many other ETFs. This means that more of your money is working for you rather than being eaten up by fees. Additionally, VGT has a relatively low turnover ratio, which can result in lower transaction costs and tax efficiency. This makes it an attractive option for long-term investors looking to minimize their costs. Now let's take a look and discuss the benefits of investing in VGT. One of the main advantages is diversification within the technology sector. By holding a broad range of technology stocks, you're spreading your risk across multiple companies and subsectors. Another benefit of the growth story in VGT is the growth of the technology sector. Many tech companies are often at the forefront of innovation, which can also lead to significant growth opportunities in the long run. By investing in VGT, you're positioning yourself to potentially benefit from this growth. VGT also offers liquidity and flexibility. As an ETF, it can be bought and sold throughout the trading day, providing investors with the ability to react to market movements and adjust their positions as needed. Lastly, the low expense ratio and tax efficiency of VGT make it a cost-effective choice for investors. Keeping costs low is crucial for maximizing your long-term returns. While VGT has many benefits, it's also important to consider the potential risks. The technology sector can be volatile, and tech stocks can experience significant price swings. This volatility can impact the value of your investment in VGT. Another consideration is the concentration risk. Although VGT is diversified within the tech sector, it is still heavily focused on technology companies. If the tech sector as a whole experiences a downturn, VGT's performance will likely be negatively affected. Lastly, while the low expense ratio is a benefit, it's also important to remember that all investments come with some level of cost. Be sure to consider the total cost of your investment, including any brokerage fees or potential taxes. So is VGT the right investment for you? It really depends on your financial goals, risk tolerance, and investment strategy. If you're looking for exposure to the technology sector and you're comfortable with the associated risks, VGT can make a great addition to your portfolio. VGT is also especially suitable for investors who believe in the long-term growth of the technology sector and want a low-cost, diversified way to invest in it. However, if you're seeking a more balanced approach, you might want to consider combining VGT with other sector or broad market ETFs. In conclusion, the Vanguard Information Technology ETF, or VGT, offers a compelling way to invest in the technology sector. With its low expense ratio, diversification, and growth potential, it can be a valuable addition to many investment portfolios. Here's a few final tips to consider. Always consider your risk tolerance and investment goals before choosing an investment. Make sure to diversify your portfolio to balance risk and return. Keep an eye on the performance of your investments and make adjustments as needed. And take advantage of the low costs and flexibility of ETFs like VGT. If you found this video helpful, please be sure to give it a thumbs up and don't forget to subscribe for more personal finance and investing tips. Leave a comment down below if you have any questions or if there's a specific topic you'd like me to cover in a future video. Thanks for watching, and I'll see you in the next one.